Now let's narrow our focus to the specific type of attached home that's also feeling the chill of the market, particularly at the lower price points. So one of the toughest segments of the market right now are these downtown condos that are particularly, under $300,000, but have very high HOAs. And there's a reason why they're still priced under $300,000. Usually the HOA is really stopping that community from growing in value because it's an $800 to $1,200 HOA per month that people are having to pay. And when buyers are looking at these types of communities, they're thinking, well, I could get a really good price on this home, but most of my money is going to be poured into the HOA and the maintenance of the property, and it's not coming back to me in the form of equity. And so, if I'm a cash buyer, then maybe I'd consider this type of option because I could get a really good deal on the price and I am paying a higher HOA, but I'm still making, money and I'm seeing the property appreciate a little bit. But you're also worried about the stunted growth of the community, right? In some of these areas where they're not growing because of the HOA. And if I'm getting a loan on the property, with interest rates today, I'm probably only making $200 to $300 a month of principal. The rest is going to interest and HOA dues. And that's just not very exciting for people, especially when you're taking on the risk of assessments that could happen in the community where, the roof needs to be replaced and these HOAs just are not getting insured very well in their master policies. And so it's causing a big amount of risk to go on the homeowners because they're sending that back to homeowners saying, every homeowner pay us $5,000 or $7,500 and you have until this day to do it. That's not a position that anyone wants to be in. Thankfully, there are policy riders that you can do with your insurance to cover you for special assessments, and I highly recommend looking into those if you own one of these. But it's just one of those situations where the risk doesn't quite outweigh the reward right now, in my opinion, in the market, and that's why these tend to sit for longer than other types of homes out there. Also, a lot of these buildings where these less expensive condo options are in the city of Denver, a lot of times they look less attractive from outside. They're kind of boxy, or they just don't have the appeal that some of these newer maybe townhomes or condos have in the suburbs, and that's why people are gravitating to those, especially with the lower HOA fees right now. There's noticeably more clogged inventory in the under $300,000 condo segment than many higher priced detached homes, creating a much tougher environment for these types of sellers. While that lifestyle appeal of lock and leave city living remains in these types of properties, buyers are increasingly picky and have more options to consider. So if you're a seller with a type of property like this, you have to be very aggressive on pricing, and showcasing your listing and all the unique benefits of the downtown lifestyle are very essential to be able to find a buyer.